Hey everyone, Terry here, and this is Choose Me. Previously, our participants have realigned their portfolios and goals and are ready for another round of case study sharing. However, what they don't know is that there will be a very special guest joining us during this session. I wonder, who could it be?
Of course, last week we did the personal session, and then I gave you guys some of the actionable steps so you have to follow through, right? But today is more of like what we have prepared, which is a group presentation. So now, before we begin, right, I would like to invite someone up.
Eric!
Let's welcome Eric.
Hello!
Hello. We spotlight him for everyone.
Great to see everyone here. And thanks Mingyao for taking care of all of you right here, and excited to see what you all will be sharing today. Yeah.
Okay, Jia Xuan, without further ado, are you ready?
Yeah. Before I start sharing my company, right, can you all tell me what does all these companies have in common?
China.
China, right? Okay. So what I realized, right, all these companies, right, they're linked to my sharing today, which is TIGR Brokers. Why? Because TIGR Brokers actually helped all these companies to actually IPO. So anyway, back to the business model, right? So these are the core products and services that TIGR provides. First of all, as their name suggests, right, they must do brokerage services. The second one they actually provide is actually institutional and corporate services. So they help companies to distribute shares to their employees using ESOP, or they help companies that wants to go IPO by doing underwriting, as well as providing investor relations services for such companies that they want to do IPOs. The next service they provide is actually financial servicing. So they actually lend money to customers. The next service they provide is actually security lending. So they allow customers to actually do short selling. Then the next service they provide is asset management as well as wealth management. So they allow their customers to actually buy pre-IPO shares, meaning that the retail investors can actually join in on the IPO process. So they don't have to wait until the company have already IPO before they can start purchasing all these shares. Then the next product they provide is actually fund more. So they allow their customers to actually, or their retail investors to choose from all these funds and then invest in them. They have the Cash Plus, which is one of their actively managed investment products. And last but not least, they provide free services. So these are the services that everyone can have: your market information, your community engagement, your investor education, as well as your simulated tradings. So I believe all these complementary services are important because it's going to let people try out their product, their platform, and make sure that people understand how to use it and before they actually get hooked onto their services. And there is the mind map of how their revenues are being generated, either through commission, either through other revenues, financing fees, or interest income. And then from these 4 different segments, right, this is a revenue breakdown. Okay, so if commission is the key revenue stream, right, these are some of the key metrics we should note for brokerage companies. Firstly is the number of customer accounts, the number of customer accounts with deposit. And you can see that over the different quarters, right, from 2016 onwards, right, the number of customers accounts as well as the deposits have been continue increasing over the years, and more people are depositing it. So I will look at the ones with the deposit. Why? Because it tells me that people actually put in their money, they're taking action to do something. Because even though you create an account, but if you don't put money inside, it means you're not actually trading, right? You're not doing any actions. And if you don't do any actions, right, there will be commissions being earned by TIGR Broker itself. That's why I'm very happy to see the one with deposit parts. The most important one is this. It's the daily average trading volume. Why? Because you have to do trading to get commissions, right? And if the trading volume is low, do you agree that the commission they get is going to be affected as well, right? So this is why I'm happy to see that the daily average trading volume actually increased along these 4 years. Let's have a look at the economy mode of TIGR Broker. By looking at the gross profit margin, you all think that TIGR Broker have a moat. Have, right? Because VIB told us that more than 40% means they got a strong moat. If I were to compare between TIGR Broker and Futu, right, you can see that their gross profit margin, both are around 80 plus. Then you must be wondering, which one is the one that has a moat? Or both have no moat? So for me, right, after looking at this and comparing a bit, right, I feel that TIGR Broker is trying to build their moat because across the whole industry, most of them have quite high gross profit margin. So what are the moats I'm talking about, right? Firstly, they want to continue improve their proprietary and cutting edge technology. And secondly, they want to make sure that the infrastructure is very agile and scalable because they want to enter markets better and faster. And next one is to have self-clearing capabilities. What is self-clearing, right? So it's actually a license that brokerage companies have to apply before they can actually handle buy and sell orders to hold on to the custody of all these account owners, securities and their assets. These are the 4 different drivers that TIGR Brokers actually stated in their annual report. They want to expand internationally. They want to broaden and capitalize their customer base. And then the third one is to extend the breadth and depth of their offering. And last but not least, to strengthen their infrastructure and technology. But then what about the risk? Firstly, the risk is regulation. I mean, by being in many different countries doing financial, right, you're going to be bound by a lot of regulation rules, be in the US, United States, Australia, Singapore, and not to mention China, right? Okay, so this is the management. So the first one is the CEO and director. He's actually been around since 2014. You can see that he actually gotten an entrepreneurial elite under 35 in 2016, as well as 40 business elites under 40 in China. Because to me, right, China being so big, right, so many talents, right, to get the top 40, and not say 40, the top 100, right, it's like already very amazing already. With all these awards, right, it actually validates his capability as a good founder as well as a management. So a quick rush through about the numbers. Then in terms of the V-star chart, it's quite good. The growth is excellent. And then you can see that the animals is actually from cheetah to gorilla. So it actually tells me that they have more money now. And this is a good sign as well. So in terms of TIGR's revenue and other numbers, you can see that it's increasing from negative EBIT to positive EBIT. Net profit also increasing. Also the EPS from negative become positive, increasing as well. But if you look at this, will you tell me, based on numbers itself, would you prefer to invest in TIGR Brokers or Futu? Just based on numbers. TIGR, right? Why? Because PIB taught us that the current ratio must be more than 1, the cash ratio must be more than 0.5 minimally, which Futu failed. Then total debt to equity is supposed to be less than 0.5, but look at Futu, 2.56, right? It's more leveraged than ever. So if you're just looking on numbers wise, right, it shows a clear winner over here. Then moving on to the cash flow, you can see that both companies actually, their free cash flow, right, cannot be seen. Why? Because it's very closely knitted to their cash from operations, which is good, right? Because it tells you that there's a lot of free cash flow, the capex is very little. And what are the next steps you should do? Firstly, you should continue to monitor quarterly because you want to make sure that the key metrics continue to increase over the years, and also make sure that they actually achieve all these growth drivers that they mentioned. And make sure that the numbers continue to increase. Okay, so with that, I will end for today.
Wow, guys, how do you all feel about this first?
Very good.
Right.
I think it's a good comparison between TIGR and Futu.
Mm-hmm.
And what I like is he actually compare it side by side, so you can see very clearly who is the winner. I think I will put this in the watch list.
Nice. So he managed to influence you. He can be
Yes.
a V-coacher already.
Yes.
I have similar pointers, so I'll just quote unquote as per above, right? Clear mind map on the business model, and then the clear metrics for the TIGR broker. But overall, I think it's a good presentation in terms of the 3R model. You follow very closely. That's nice. Okay? Thank you, Jia Xuan.
Hey, want to get weekly coaching from our experts? If you do, just head over to V app and join our V coaching sessions where our coaches will discuss the latest investment topics and case studies. What's more, you get to share your thoughts with a community of investors. It's simple, just select a plan that best suits your needs and you're all set to grow your investment portfolio.
Okay, so today the case study I am sharing today is on LMND. Yeah, and then I happen to wear the same color shirt. So this is the corporate color for LMND. Okay, so LMND company is founded in 2015 and is listed on the New York Stock Exchange. So LMND is a technology company that is selling insurance. The key differentiator for LMND versus the many other companies is that they use artificial intelligence and behavioral economics together with machine learning. In terms of their geography expansion, they are currently in the US, Germany, Netherlands, and France. These are the products that currently LMND has. Subsequently, in fact, in this quarter, they will be launching the automobile insurance. That will be the car insurance products. For them, they are very different from traditional companies in that they depend on what they call insurance powered by artificial intelligence and behavioral economics and driven by common good. So this is their strategy when it comes to growing their market share. So when it comes to delighting customers in terms of the premiums, how much premiums exactly are we paying? So the first point is that they make sure they are targeting customers that are the millennial and the Gen Z generation. And across the board, you can see that when it comes to all the common insurance companies that they're offering against, almost consistently, they are offering their product to be a lot cheaper compared to the other incumbents. Most of the insurance companies, when it comes to the net promoter score, let's say very good companies, right, at this far end, Generally, Net Promoter Score would be 10 to 20, but Lemonade, they're able to garner a very good Net Promoter Score of 70. They are definitely a standout. You will see here that across the 3 years, right, their year-on-year growth is very fast. A key metric that they use to see their growth is what they call in-force premium. So with in-force premium, right, it's actually the number of customers multiplied by the premium per customer, and then that's how they get their in-force premium. You can see that, okay, in 2018, 2019, and 2020, it is also a very big jump. So the other point in their business model is using artificial intelligence. For example, they have this AI Maya who is in charge of onboarding. This AI will ask about 13 to 15 data points, and from those 13 to 15 data points, they will be able to churn out a quotation very quickly for you. And the onboarding can be as fast as 90 seconds. Okay, so that one is one of the added ways to the delightful customer experience. Then what happens when we need to do a claim? So AI Jim is the claims guy. Everything will be done even without any human intervention as far as possible. So if let's say this guy lost a laptop and then put in the claims, okay, for their item. So if they go through all the inputs and AI Jim can see that there is no fraud in this whole setup, then as fast as 3 seconds later, this person putting in the claim can obtain the money already. Now, for the premiums that we pay for the products that we buy from Lemonade, what happens is that Lemonade will take to that 25% of the premium. 75%, right, passed on to a reinsurance program. If let's say throughout the whole year, right, there is no claims, or let's say there's leftover money, then it goes into this system called the give back program. So in this sense, this whole transparency over here helps customers to have that kind of goodwill generated with the company. So how is Lemonade driving their growth? So they will continue to be diversifying insurance products. Also, in terms of their market strategy, they want to acquire first-time insurance customers. So economic moat, currently the one that I identify as the most important or key differentiator will be their intangible assets. This whole Lemonade is founded on a digital substrate. So the predictive data, the artificial learning, the machine learning is something that the other companies are unable to catch up and follow on yet. When it comes to the financials of the company, I mean, definitely it is a young, fast-growing company. And from the IPO, they definitely have huge cash reserves. The good thing is that in their growth, there is no debt. It's loss-making for now, but you can see that it's because they are actively putting it back into the business to invest for growth. So in terms of growth performance, you can see that the growth is definitely there. Over here, you can see that in terms of the premiums per customer, it is also actively growing. So they introduced this thing that is called annual dollar retention over time. You can see that from Q1 19 to Q1 21, the annual dollar retention has been growing. Ideally, we hope to see that it's able to cross the 100% mark. So I think what I'm looking out for is that number one, I'll be watching for the car insurance launch execution plans this year. And then just now I also mentioned moving forward, right? Are they having any change in their catastrophic management? And hoping to see that they optimize their reinsurance. Okay, that is the end.
Nice.
Thanks, Karen, for the analysis. I think it's very comprehensive. From every slide, you really expand a lot more. But my comment is this: I'm not an audio person, so I'll very easily lost when I listen. Visual will help people like me.
For myself, right, I focus on the other portion actually. They have negative profit, they have negative cash flow, correct? So maybe one question is how long do you think they can sustain with this cash burn format? So for example, they are burning about 120 million a year, but then they have about 1.2 billion cash in the bank. So with this number, Aga, how long do you think they can survive like this if we cash burn 120 million every single year?
10.
Exactly. Yeah, so roughly, so you know whether this type of burn rate, whether they have enough cash to cover my own guideline, like at least 5 years. For investors, right, like you guys, there must be a certain threshold in terms of, well, they keep burning, but then do they even have enough cash to sustain it or not? If their cash is going to burn out in 2-3 years time, right, then you see one time COVID hit, then they might be a very deep trouble. And then the closing thoughts is a good summary. Yeah, that's something I have for you. But I'm same as Eric. I need visual actually. That's for sure. Right?
Okay.
Yeah, but the rest are very good. Wow, Eric, how do you feel about just now the case study presentation?
Oh my god, I'm really impressed. Wow, the analysis that they have shared just now is like a full-time analyst kind of a case study. And they are so detailed that it seems like they are working inside the company. So how do you think, Mingyao?
Well, personally, I think that that's a lot of dedication from them, right? Even though I can coach them or you can coach them, but they put in a lot of effort even though they are coding full-time job, but they are still putting time into the analysis that we saw just now, right? And more importantly is that we found opportunity for them to do options tonight.
Yeah, exactly. So Mingyao, I gotta go. I gotta go make money. Thanks for your sharing. Bye bye.
Wait, this is not a buy or sell recommendation. Wait, come back. Wait.
It was great to have Eric back. Although Mingyao is still taking over Eric's mentorship tasks, I'm sure this won't be the last time we'll see Eric. Stay tuned for the next episode where we'll continue with more case studies from Georgiana and Jonathan. Enjoying the series so far? Then drop us a like and subscribe. Don't forget to hit that notification bell to get updated when our next episode is released.